All right, thank you for staying with Daybreak. I see some of your views coming through at Trevor Mbija at Citizen TV Kenya. Use the hashtag Daybreak. We're still talking about Kenya's debt burden as we anticipate the IMF loan, which has been approved around 255 billion or 257 billion, depending on which exchange rate you're using, coming through to the nation. Kenyans are signing an online petition, more than 200,000 of them, saying that you should stop loaning Kenyans. Joining me now is CPA Edwin Makori, is the CEO ISPAC, which is the Institute of Certified Public Accountants of Kenya. Thank you so much for making time. And Tony Watima, an independent economist, is also joining me now. Samuel Karanja, CEO MSME Alliance of Kenya, is still with me. And Honorable Gladys Wanga, Homa Bay Women Representative, and also the chair for the Finance and Planning Committee, is also with me online. And CPA Makori, I'll start with you. Are our books balancing? As an accountant, should we even be taking loans right now?
Thank you, Trevor. That's a big question that we, as a country, we've been grappling with, that we should be able to answer maybe in a few years from now. I think the biggest challenge that we have is that we don't have complete records of our debts, our assets, and liabilities. So the first point is just being able to get our act right. I mean, being able to put a loan book that is complete. Yeah. I think the biggest challenge that we have also, even as we look at our debt, we talk about the national debt, but we don't look at debt that has been borrowed by state-owned enterprises and also county governments and consolidate that to be one debt that is going to be recorded as a Kenyan debt. Yeah. So with that challenge that we have and not being able to have a complete stock of our entire assets, liabilities, and also debt obligations, yeah, I cannot comfortably sit here and say that our books are balancing, but I know the government is working towards moving towards an accrual basis of accounting, which will now be able to bring in assets, liabilities, and obligations that then will be able to provide a proper position on where the country is. Yeah. And we look forward to be in that position so that we can compare with countries like Australia and Canada and New Zealand, who can now be able to tell what their book balance is at any given time.
Okay. Tony, should we be taking loans right now?
Okay, thank you for having me. Yes, no government survives without loans. Yeah. And for the time we are here in the world, we'll have a government taking loans throughout. The question is, how sustainable are you taking those loans? Yeah. And that's the biggest question I think Kenyans are having. So if you read the IMF report and the press release, they have two issues they raise. Kenya is a high risk of debt distress, and at the same time they say Kenya is sustainable. So to differentiate those two, you use two different indicators. And so what they are claiming that IMF saying that Kenya's debt is sustainable, they are looking at public debt to GDP, which it's claimed to be around 70%. That's an understatement though. It's higher than that. So from that pretext, we are sustainable. But the issue is, it's always, you miss the point when you focus on public debt to GDP, because you can be at a public debt GDP very high and you're still sustainable. And that's a conversation at one time we're having about Kenya and Japan. Kenya and Japan has a high public debt and it's still sustainable. So the other side, which is a high debt risk that we're having, is about debt servicing. Yeah. And so we use a lot of money in terms of servicing debt. You look at the ratio of debt servicing cost to exports and debt servicing cost to revenues. Those are, we've passed the threshold, meaning that we're in a very high-risk place. And so when you talk about a debt crisis, and one of the things that we need to be concerned about when you mention about a debt crisis, many people miss the point. Yeah. A debt crisis comes in a point where you use a lot of revenues. That you're supposed to do development, you use it in paying debt. So you shrink the amount of government spending and government that should do its main business. Yeah. You do a lot of that in paying debt. When you get to that point, you are branded in a debt crisis. And so if you look at Kenya's position today, we are in that position.
We're in a
And
debt
so the
crisis.
concern is not about sustainability with public debt to GDP.
Yeah.
The concern is about public debt servicing cost to revenue. We are using a lot of revenue to service debts.
Okay.
Yes.
Most of our revenue is being used to service debt. Honorable
Yes.
Wanga, is that the situation now? And should we be restructuring our loans or rescheduling them? Because some people argue that we're simply kicking the can down the road.
Well, I want to agree with Tony that if you look at our debt service, public debt to revenue ratio and the debt servicing to the revenue and grants that we receive, we are above the threshold. And therefore, I think we need to look at how to, not really, reschedule, because if you reschedule, it's like you're falling back on your debt. And if you fall back on our debts, then we will not have a good credit rating to be able to borrow, because we will always need to borrow. Just like in our own daily lives, we always need to borrow, but you borrow up to a certain extent that you're able to keep paying. I think CPM Akori said that the problem is we do not have a complete debt register, or we do not show our debt, including the guarantees that we have to state-owned enterprises and so on. But if he looks at the medium-term debt management strategy that comes to Parliament every 15, there is actually a brief there on our debt and our guarantees. And one of the things that we aim at as the Finance Committee is to keep getting the updated debt register, so that we're able to know at any given point how much exactly we owe. So that information is available. Whether it's comprehensive enough for his use is another issue. But there's a lot of these documents, and I think the PFM Act is very clear as to what is submitted to Parliament. And I think when the medium-term debt management strategy is submitted to Parliament together with the BPS, they must include guarantees that the loans that government has guaranteed to counties or state-owned enterprises, such as Kenya Power, KenGen, Kenya Airways. They're all there, amounting to about 171 billion, the guarantees. Okay.
CPM Akori, usually I like to make the conversations around the economy very simple for Mama Mboga. Their concern right now is how do we ease in the times for the Mama Mboga? Simple as such. From an accountant's perspective, what should we do now? What are the recommendations you're making to make the times as slightly easier for them, economically speaking?
I think we find ourselves in a very interesting times. There's a lot of balance that the government has to be able to put in place at this particular time, owing to the pandemic. I think looking at it and just taking from the statistics that have been given, our country has been, the economic growth has been, the first half of the year, which is since the government starts from July all the way to June, between July and December last year, which is the first half of the year, they say that the economy was growing at negative 5.5%. And this is documented by the IMF also to show that the country was not doing that well. In the first quarter of the year, which is just the third quarter of the financial year for the government, that has slightly improved to minus 1.1%. Why is that so? Because there's reduced economic activity as a result of the pandemic. And therefore, looking at Mama Mboga and being able to see what is it that we can actually be able to do for them, I think the tax measures that had been put in place to be able to cushion the common man should have actually set in for a longer time. The duration that was given for that, and which was lifted on 1st of January, did not help Mama Mboga very much. And what still, we've gone now into an increase in fuel prices, which has a direct impact on the cost of goods that are going to be procured by Mama Mboga at any given time.
Yeah.
So for Mama Mboga to be able to benefit is just being able to look at now, how do we then contain the pandemic that we have so that we are able to open up the economy first, to have moderate economic activity in the country, and therefore start the circulation of money towards the various sectors within the economy. But as it is, and from the position where we are in, where we have massive layoffs of employees, companies having to be able to look at their performance and productivity, because you remember that we've zoned out some of the counties as disease-infected areas.
Yeah.
There's no movement. As much as goods and services are moving, it means that we also constraining the people who are within that productive area from being able to explore other business opportunities beyond the zone area. So we can pass goods, yes, to the other side, but if people are not moving to be able to carry out those transactions, it becomes very difficult for us to be able to say that right now we can sit and say we can be able to provide for adequate economic measures. Yes, if we contain the pandemic, that will be one of the things that will be able to assist the economy. Two, is just being able to, the discussion that you're having now about debt, so that you're able to, government is able to release, and especially from domestic borrowing, where government borrows heavily from our banks to be able to finance its operations. If that can be reduced, then it opens up more resources that are being able to be available to the SMEs, as rightfully put, that 98% of our economy is run by SMEs. So we need to be able to provide and open up those funds to SMEs. And then being able to look at how to widen the tax base. I mean, we've just been taxing the same people year in, year out, and KRA now needs to be able to look at innovative ways of being able to look at this. And being able to plan, because they need to be able to look at and replan and reassess themselves completely in how they look at the taxpayer, because we have the high contacts, high impacted or highly affected sectors that are going to be impacted for a long time. The aviation industry, the hotel industry, the tourism, which is our biggest earner of revenue. And with that, we also know that there has been massive layoffs of maybe up to 2.3 million people who have been laid off as a result of this pandemic. That in itself creates another problem, that then revenue will not be realized as required. So a raft of measures that I don't know, Honorable Wanga is here to be able to assist and tell us, is it possible to be able to bring in the concessions, that the tax concessions that then will be able to help cushion our citizens? Tax concessions,
we'll talk about that in just a bit, but there was a question that was asked by Honorable Wanga earlier on in terms of the credit-back guarantee scheme. Is it working? 3 billion shillings put in by the government for MSMEs. Is there an impact?
No, it's not working. And I think the government should also be able to follow up on the same. Because as Mheshimiwa Wanga said, that the stimulus package was supposed to help small, medium entrepreneurs, and you are not supposed to be given money with the ratings that the banks are giving money. And I remember some of the banks, the list of the banks which were supposed to dispense that money. As an alliance, we were able even to go and visit several banks to see whether it's being implemented. But you find that it's not being implemented. So the government has already given a directive. It has already given money towards cushioning small and medium entrepreneurs, and you find that they are not executing that now. Also, having said that, let me also say that also the government is competing with small and medium entrepreneurs to borrow from these banks. So why should they give you money as SMEs, and they are getting better rates with the bank, with the government. So it's like you know, a mother eating his children. So we must be able to make sure that the government is able to give money and to give loans, and those incentives are supposed to be made sure that they are implemented. Let me say this, Trevor, the straight jacket kind of approach by the government to be able to cushion small medium entrepreneurs is causing a lot of harm. Why? Because they are giving, like they talked about the credit guarantees schemes, and you have asked Mr. Makori about Mama Mboga down there. Mama Mboga wants to step into a financial institution and get 5,000 shillings to pay in a week or 2 weeks' time. Mama Mboga wants to step into another financial institution and be able to open another kibanda down there. But there are no avenues that can be able, she can be able to get that money from. Yeah. And so we have to be very practical, even as a government. Let's not have very high way of, or let's not have unreachable policies or unreachable implementations that, you know, these people cannot be able to get money. I remember there's an avenue, one of the, I think it's one of the alliances, or one of the government alliances. Yeah. They were giving money to small medium entrepreneurs, and one of the things that they say that you have to become a member of this entity, and then from there you have to register with a certain card. So when you go down there, you ask Mama Mboga, this card that you are being registered to for you to get money, how is it going to help you? You find that you have to go to the basics. Yeah. Very, very simplified ways of them getting money. And those simplified ways are going to caution these people, because ideally, Mama Mboga, a good number of SME traders in that sector, they don't pay taxes. And why don't they? They only pay taxes through 16% when they go to the supermarket and other places. So the tax base can only be widened when we have innovative ways of collecting money from SMEs. Go to KRA, ask them, how do they tax Mama Mboga out down there? They have come up with different taxes which have failed. Presumptive tax has failed. TOT has failed. So how are you going to tell Mama Mboga to go to the internet, register for an iTax, then you pay taxes to KRA? Why don't they come with a USSD code whereby a Mama Mboga can pay 50 shillings on a daily basis to be able to do business where they are doing businesses? It's very simplified indigenous ways that are going to help the government be able to raise more money and also keep these businesses afloat. Yeah. Yeah.
Tony, we were talking about how to sustain the Mama Mboga and how to make times easier for them. What would you recommend from an economist perspective? Yes, we have debt, but that's at the government level. How do we make life easier for people on the lowest cadre?
I don't think debt is a national issue about national government, because it's taxpayers who still fund it. Yeah. And I think that's the biggest problem that we have. Because what we have, the problem we have, the primary problem where it comes from, is that we have a government that has a lot of expenditure. And the government raises revenue, half of it. You have debt that you finance from that. That debt-fueled growth is the problem. Yeah. Because at the same time, you have to tax people a lot of increased taxes. At the same time, you have to borrow highly. If you want to lessen the burden, you will have to start from that position. What is government's main priority within the budget? How do we scale down government activities? So you move, when you do that, you move more money outside government back to the people. But the fact that we have a reverse of that government wants to do everything. Government will continue taking money from people every day, every year. No matter what taxes we introduce, no matter what you do, unless you are having a very highly productive economy, that's how it can work. And you look at Germany, and that's how it works. They have highest taxes within Europe, but they are most productive because they have the economy is producing in a very highly efficient levels. So unless you are that position, we cannot do that. We might talk about credit guarantee scheme. It has its own bureaucracy before it starts working it very well. It takes time to build that thing, by the way, and it will not happen anytime soon. Yeah. Because first you have to de-risk certain sectors, because no bank will want to lend a sector that he doesn't understand completely. And you find, especially in formal sectors, how do they, you don't have a collateral. How do they cater for that risk? And so the main thing about the credit guarantee scheme is to work, an institution that is a government agency working to de-risk such sectors, that's when banks will come in. The fact that we have not de-risked quite a number of those sectors, that scheme will never work. And so the question that you're asking is a very broad question, and it depends on how you're looking at. But if you're looking at generally about Mama Mboga, I think the best thing you can do is how do we reduce taxes and the burden from general Kenyans. From there, we move to the issue about formality. It will be easy to formalize a business so long as bureaucracy and taxation are all there. So if you're talking about widening the tax base, you will have to formalize those businesses. And you have to incentivize those businesses to formalize. Because if you're telling somebody to formalize today, you're telling them you're increasing your tax burden. And so they will resist. That's the confluence that we're having. Unless we have an economy that's moving a lot of people from the informal sector to the formal sector, that means we're increasing productivity, and that means we can increase our tax base. The fact that that is not happening, we have a long way to go.
Honorable Wanga, are you surprised that this credit-backed guarantee scheme is not working? Because you said you took this upon yourself to ensure that it works.
Trevor, it's good to get that feedback. And I think it's incumbent upon us now as a committee to call back Treasury and call back, call Samuel and his team to see where are the gaps. Because the whole idea was, what Tony is speaking about, how does a bank then, risk lending to an MSME that it doesn't know. And the idea was the government then, guarantees that loan so that in the event of default, there is that fallback position. So I think, Trevor, what I would say there is the committee would then, invite Treasury and invite the MSMEs to see where the clog is, if in the event that it is not working, to see where the clog is and to see how to open it up. But we were very, very keen, as we were rolling out or doing the legislation for the credit guarantee scheme to ensure that we include micro, small, and medium, so that the micro, the Mama Mbogas that we're talking about, people with, an annual turnover of, 120,000, whatever, very, very small businesses were also able to be incorporated. But if the bureaucracies do not allow them, the micro enterprises to access credit, then there is a problem, and we need to come back and review because it's about 6-7 months now. So I think it's high time to review how far that has gone and where, if there is a problem, where the problem is. So I can assure you that we will be taking action on that matter. So on the issue of, the tax relief measures, because I believe, how are we going to spark growth from the bottom? I think we must avail money, in the hands of the people. Because when people have disposable income, then they're able to spend it. Then we're able to collect more taxes. We should be able to avail as much disposable income as possible in the hands of Kenyans, especially at the lowest level. And I'd like to appreciate, some of the stimulus programs that we had. And if we can actually continue to have some of those stimulus programs, I believe we're going somewhere. For example, the program that we had of young people creating desks for schools. I know several young people who, who had nothing at the time, but when they got, jobs to do 500, 300 desks, they are now somewhere because now we have put money in their pockets. So some of these stimulus programs, I think, are things that we need to consider doing more of. But what I'd like to ask and put out there, if we have tax relief measures, we definitely have a dip in revenue. If we have a dip in revenue, we must look for then ways of how do we supplement for the revenue that we have lost, not really lost, but that we have used to cushion Kenyans during this time of pandemic. And I think it's, globally acceptable that then you would be able to borrow, especially if you get concessionary, loans that are not too expensive. So I think we can't have our cake and eat it. But that is not to say that we go on a borrowing spree or to say that we misuse the money that we receive from borrowing. But we must understand, we must be at a point of understanding that every action has an equal and opposite reaction, as we were taught in physics.
Yeah. CP Makori, you know, Honorable Wanga is the chair for the Finance and Planning Committee. At this particular point, what would you wish they would do as a person?
I think the one of the things that is just being able to go back to the tax reliefs that we had initially, looking at PAYE,
Yeah.
VAT, and corporation tax. But more concerned is about the minimum tax that is that has just kicked in and is meant to be payable by the 20th. For most businesses, then it will mean that that is even a greater impact on them, and the impact is not basically on the computation of the tax, but is on the available cash that they're going to use. It's going to create a cash flow crunch.
Yeah.
So is how to cushion the taxpayer from a higher burden of tax. Because as it is, and you understand, crude oil prices have gone up. The cost of fuel is, I mean, expected to go up. But we also know that in the same fuel, the biggest component is tax.
Yeah.
So how then do we make it as reasonable as possible for the common man to be able to feel the effect? And Honorable Luanga said it rightly. When people have more disposable income, they're able to spend. But if you're going to have most of that money being taxed and taken away, then it means that they have little money to be able to circulate, and therefore they can't buy. I mean, I have to be very cautious on how I take out my expenditure and where do I spend my money on. And that in itself has an effect on how the economy grows. And I know the economist is here will tell you that if money is not circulating, then the economy is not growing.
Yeah.
The other thing that we need to actually critically look at is how then, besides just the tax measures that we are putting in, how do we contain this pandemic? Because there's no plan that has come out clearly to be able to say that even as we zoned out these areas, that we have the vaccination plan for these zone areas is in the next 3 weeks or 4 weeks, we should have vaccinated maybe 20 million or 4 million people within the zone area. And what is the impact of that? So that we then say that we can now be able to open up and lessen the restrictions to be able to have economic vibrancy.
So was locking down the 5 counties a good idea?
Yes and no.
Okay.
Yes, on a health, from the health perspective, yes.
Yeah.
From an economic perspective, it has adverse impacts.
Yeah.
We've seen the impact is not even in the zoned areas alone. Yeah. The impact has been on the non-zoned areas. And I'll give an example, Mombasa, for example, which is almost becoming a ghost town now because the people who frequent the coastal region are coming from the zone area, yeah, and part of it from the western side. So if people can't go through Nairobi or they can't fly to Mombasa, then it means that in effect, you are crippling the economy in Mombasa. Therefore, all this has an economic impact, yeah, to regions, yeah, that might not be felt if you are in the zoned area, but those who are outside the zoned area can actually feel the effect of zoning out the 5 counties.
Okay. Tony, you know IMF gives some conditions, tough conditions, one of them being that all public servants declare their wealth and that the government makes public the ownership details of all companies that are awarded public tenders as a way of curbing the rampant theft of taxpayers' funds. Is this even feasible to begin with, and is this necessary? Because they also mentioned reforms in some state-owned enterprises, KQ, for example, and Kenya Power, for example. Why the interest in those?
Okay. Before I answer that, let me answer something I think Honorable Gladys asked, that you cannot have a cake and eat it in terms of we took tax relief, and yeah, so we have to borrow. First, the issue about debt and taxes lies squarely with the Parliament. The second issue is that last year, the government took a lot of debts, took quite a number of debt. First, there was an IMF debt, a facility specifically for emergencies. It's called the Rapid Credit Facility. It's not given to countries outside emergency issues. And so they are have very favorable terms. We got, I think, 30 billion around there. We got a debt relief, and a debt servicing relief from the Paris Club. And so we look at those two. We have already plugged the hole that we're talking about, the tax relief. Okay. Second, the tax relief that we are talking about was only there within 6 months, and it was eliminated in January. Much of it was eliminated in January. And if you read the IMF press statement, the letter of intent that was released yesterday, and you see the tax measures they were saying that have been brought back after the tax relief. And most of those things, most of the tax measures were brought back. And so the issue about now we're bringing in IMF's new loan, we need to separate now what we received last year and this year. What we received last year in loans in terms of IMF was specifically for the pandemic response that the Honorable Gladys was mentioned. I think we have a deficit in our revenues, and so they were plugging that. What we have today that we've signed today is a very different thing. It's not corona related. The issue is that we are in a problem, and so it's a structural adjustment loan when you read those terms as you mentioned. And you see that those measures work for a period of 3 years. And IMF are specific that we have issues about revenue collection, we have issues about debt vulnerability, we have a number of issues, non-performing state institutions, and all that. You look at those conditions and you look at IMF structural adjustment program in any country they've gone. Those are quite a number of measures that we call austerity measures. When you have IMF coming for austerity measures, it means as an economy, you're in a bad place. And so that's the reality that we need to live into, that these loans means a different thing, not from what we're talking about as a pandemic linked to pandemic. And so those conditions, whether we like it or not, we'll have to abide by them. Because the three-year program means it's released, the money is released in batches. We've been given the first. The first, the second, the first evaluation comes after 18 months. And you've been given targets to meet. Unless you meet those targets, you'll not be receiving much of the funds. And so one of the other things we'll be looking at, quite a number of things, is that wage bill is quite high. Yeah. That will be coming into that. We expect retrenchments will be coming because wage bill has to be around that 5% threshold. We're talking about government spending. IMF is clear. We need to cut government spending. And to cut government spending in the next 1 year, we are cutting by around 2%. We are talking about CBK's regime is changing. We are going to an inflationary targeting monetary policy. Those conditions have to be met if you want to work with IMF. Yeah. And the cost is high, because if you don't work with IMF, and ideally I think there's a misconception of how IMF works. If in the event that Kenya is in a position to default, IMF comes in and tries to swap that loan and so it pays the creditor, then you're able to come out of that default problem. Because if you default, it means you're locked out of the international credit market. You cannot borrow from anyone. And that cost is very high to any country. So IMF comes to that position. So when IMF comes, it comes to guarantee creditors and try to stabilize an economy that you not get into a bigger problem. And so that is a problem that we have today. And that's why I'm concerned Honorable Wanga will want to say that we have to take the tax relief measures. Means that we have to take more loans. Because I think Parliament needs to hold executive to account, and that's the biggest problem we have. Okay. And that's the concern, even if Kenyans are raising the issue with the IMF. I think the bigger concern is that this government, the executive, has not been held to account in terms of public spending and in terms of budgetary alignment. Yeah. Because budget lies squarely with Parliament, and all those things that we're talking about are debt fuel economic growth, which is high government spending, is passed by Parliament.
Do you agree, Honorable Wanga?
To the extent that Parliament needs to hold the executive to account, I agree. Parliament is an oversight body. We must hold the executive to account, and we do, you know. And even right now, we will have discussions with National Treasury as far as you know, the new IMF program and exactly what it will be, you know, what it is targeted for. I know that you know, the first deliverable, of course, is scaling up the COVID-19 response, and to ask them exactly how will we be scaling this up, exactly how will it be spent, where will it be spent, you know, and to do what exactly. So I think to that extent, I agree that Parliament has to hold the executive to account, and we must, and we do. And even in this case, we will. So to that extent, I agree. But Trevor, there are certain issues that have been mentioned also by CPA Makori around investing in the health infrastructure. We definitely, in this pandemic, must spend more on securing the health of our people. Trevor, in fact, I mean, the issue of the lockdown has a lot of, you know, a negative impact on, you know, our economies and our livelihoods. But it's a clear case of being between a rock and a hard place. And I think that's where the president was, whether to, you know, secure our health, which is, you know, the biggest priority as far as, you know, that lockdown is concerned. And it is probably what saved us in the first wave of COVID. So I just want to say that as far as our health and healthcare and our health system is concerned, I do support the lockdown and investment in our healthcare. Right now, in fact, last night I was trying to find space, you know, bed for a friend, and there is no such space. And if we continued, you know, just to move from county to county, we're going to get into a place where our health care system is completely run over by the pandemic. And I also want to agree on the issue of the vaccine. I know that in the international market, of course, there's a lot of, you know, competition for the vaccine, with countries trying to secure as much as possible for their populations. So one of the things we are pushing is that our country must also secure as much vaccine as possible so that we can get out of this pandemic as soon as possible, so that our economy can get back on track and Kenyans can go back to what they know, which is, you know, the serious entrepreneurs that they are, and everybody trying to put food on the table for their families. So we must push the issue of the vaccine, see where we are at. I'm sure the government is trying right now, like all governments in the world, trying to secure as much vaccine as possible for our people. We just wait for the announcement that we found this much vaccine, and this is how it's coming in, and this is how we are distributing it. But at the same time, Trevor, we must encourage, especially our healthcare workers and other frontline workers, to go out there and get the vaccine, because there's a lot of myths around that, and there's resistance. If you saw a report that I saw yesterday, there's resistance, highest resistance among nurses, in taking up the vaccine. So our healthcare workers must lead from the front. We must all take the vaccine so that we are able to take care. But the government also must tell us the plan. What is the plan? How much vaccine will we get in? By what time? So that as much, starting with these disease-infested counties, how much vaccine can we get in so that our people can be healthy? Okay.
Sam, what are your recommendations? You know, you're the one who knows where the shoe pinches as the MSME CEO.
Yes.
What are you recommending?
Well, there's something that I think Tony also has ironed it out and said about formalizing the informal sector. Yeah. Many times, and that is the approach that the government does, because it's called the informal sector, so they informally even approach the informal sector. And that's why even you find that even the policies that they come up with, they're not policies which they really know they are going to work. Secondly, you find that the government does not consult the informal sector. And you find that the people in the informal sector, including ourselves, plus other alliances and associations, we have organized ourselves. We are organized to a point whereby we know exactly who is in which sector and what is affecting that sector. So when the government is consulting, especially, let's say, for example, even closing of, like the way they zeroed into now, like this, zeroed into these counties, when they were making that decision, did they consult the SMEs, the impact that they are going to have in their businesses? Because I think it was a 12-hour ultimatum. It's going to happen in 12 hours. And you find that a good number of small and medium entrepreneurs, they do what we call the inter-county exchange of commerce. Secondly, how easy has the government made it for those SMEs to get even passes to go to those other counties if they are within that jurisdiction, or within that policy jurisdiction that allows them maybe to take food, to take their trading to the next county. Yeah. So you find that the government does not consult. So formalize the informal sector, and that is why as an alliance we have been engaging the government to make sure that they do that. Secondly, when they come with tax incentives, they should come up with realistic tax incentives and also cushion money. Tony has also talked about, and I think Makori has talked the same. When you talk about this money coming to SMEs, how are they dispensing this money? Yes, we are highly, there's a risk of not paying, defaulters not paying, because when you look at, when you borrow money, obviously you have to attach something towards it. But are there finances that the government can be able to give to small medium entrepreneurs, working with the people within that sector who are organized, to make sure that also they become part and parcel of what the government is doing, and also what we call the internal mechanisms of checking on each other to make sure that that money is being put to use. Yeah. So my recommendation to the government is that let's talk to this sector. Let's formalize this sector. Let's make sure that the policies that they have for this sector, they are workable. Lastly, Trevor, as we said, 98% of businesses in Kenya fall under this sector. It is a paradox that the government does not put a lot of effort in this sector. There is a lot of talk, but the implementation part of it, we can give it at around 15%. Okay. So you find that there's a lot of talk, but the implementation is zero.
Is wanting.
Yeah, is wanting.
Okay.
Yeah.
Makori, there's a question here from CPA Oscar Wanyonyi, who says, does alternative ways mean increasing the already high taxes?
Not really.
What do alternative ways of getting resources mean?
Not really. I mean, as somebody has rightfully put it, is that we have an untapped area in terms of collection of taxes. I think we've just made an attempt with digital tax, which is one of the areas where majority of the revenue, significant revenue, is going to be collected from, because with this pandemic and how things are going, people are slowly moving towards the digital platform. Yeah. Technology and innovation is going to drive most of our activities going forward. And that is one of the areas where we're going to have taxes being collected from. Okay. The other area that, and as I said, is formalization. As you formalize, you need to be able to have a tax system that is easy, convenient, and simple. Once you do that, then you are able to bring in as many people as possible. And looking at this, the Juakali sector, for example, that mama mboga who's has a daily wage, the boda boda, as Sami said, and even if they pay only 10 shillings a day, that in itself increases into the tax base. So we're not saying that widening this means higher taxes, but is being able to look at what are the other avenues where you can actually be able to collect sources from potential taxpayers who have not been paying taxes.
Okay. And Tony, there's a direct question here from you. Babu Michael says, can you please make me understand this morning why fuel is so much expensive in Kenya compared to our neighbors?
I think that's a debate, a conversation Kenyans have been having for a long time, and one of the things is about taxation. There's a lot of taxes being levied on fuel products, which makes it expensive. And that's a problem that we have, because it's an easier way to collect taxes, and it has become a target that tax policy makers will target that, because there is easier collection and there is a widespread that you target a lot of people. So even the people who are outside the bracket of income tax, you will get them at fuel prices, whether it's kerosene, whether it's what, or whether it's transport, you'll see use transport. And so you'll target a bigger vast of people. And so that's the problem that we have.
Okay. Let me bring up the feedback and then get closing remarks from my guests real quick. Let's bring them up on the screen. There are quite a number of them. We have ESC Okumu, who says, I think the problem we have in our economy is resource dispensation and misplaced priorities. The question Kenyans might be asking must look like, what has been done with the loan projection before, if we still talk of uncompleted projects? Okay. Jacob Abede says financial experts may argue that public debt is good so long as they have prudent financial management system. Countries like Japan and USA have huge debts, but economy is working. Njenga Wakungu says, why must the government continue adding taxation to the SMEs instead of widening the tax net? Treasury should have wise economists who have the apt to bring more taxpayers into the net to ease the burden carried by a few. We simply need good managers in the tax department. Asamo says the tragedy of the nation is corruption and mismanagement. Kenya has no revenue issue but a spending problem. Billions is lost to corruption daily. Julius says Kenya's debt is worrying. That is why there is price increment in basic commodities like kerosene. Let IMF deny Kenya loans, period. Kenya can sustain itself. Ndungu Wanaina, Kenyans need to study carefully the conditions under which IMF News is extending the loan facility of 257 billion to Uhuru Kenyatta's government. Uhuru Kenyatta's government is expected to float Eurobonds to raise money. This could be in range of 2 trillion or more. Is that true? Really, Tony?
I'm not sure about the figure, but yes, government expected to raise another Eurobond so as to refinance the maturing Eurobonds. So you basically borrow to pay the one that are matured and you extend the term of paying.
Wanga, is that something prudent that should happen from where you stand?
Well, I think we have to critically look at every Eurobond that we float or every debt that we get into moving forward. I think we have to look very, very carefully as to whether it's sustainable.
So this is most likely going to happen. There's going to be we're going to raise another Eurobond of about 2 trillion.
I don't know about that figure, but Trevor, in our oversight role, it's a conversation we must have with the National Treasury.
Okay. Tony, you want to jump in again?
Oh, Treasury has already indicated they are going for Eurobond. So it's happening. Our next Eurobond is coming. And it's basically about refinancing mature debt. So the fact that we still have those Eurobonds, we'll still continue refinancing. It means we'll still be raising more Eurobonds. And even IMF has stated that.
Yeah. Yes. But Makori, is this sustainable?
But remember,
yes, Wanga.
Remember, Trevor, we have the debt ceiling. And if anything is going to go beyond the 9 trillion approved, and which, if we were to go for another Eurobond, it probably would, Parliament must step in. And that's why I'm speaking to that conversation must be had.
Okay. Makori, you want to jump in on this? Is this sustainable in the long run, taking debt to finance more debt?
It might not be sustainable going forward, and I think Honorable Wanga knows that the debt now is around 7.27, moving to around 7.8. We're about to reach the 9 trillion mark. So if we get a Eurobond, then it means we are going beyond the 9 trillion ceiling that had been put in by Parliament.
Yeah.
But one of the things that we also need to look at is that more borrowing will not help us, because you're borrowing expensive loans. The Eurobond is not a cheap loan. And if you look at the debt service that we are currently doing, 467 billion of it, out of the 1.17 billion, is interest. So it means we are borrowing high, with very high interest rates, for loans that then are payable within a very short period of time, and therefore creating a strain on the economy itself, and that money could be utilized to be able to enhance productivity.
Yeah.
Somebody raised an issue there about Japan. Yes, Japan, the debt to GDP is 251, over 51.9%. But on the flip side, the productivity is very high. We buy all the cars from where? From Japan. So there's vibrancy in that economy in terms of manufacturing, which is heavy.
Yeah.
And the manufacturing is not only on cars, but electronic products, most of them are coming from Japan. And therefore, they're able to cushion that with the exports that they're making. Many other economies, the US, for example, have several reserves with them. Even if they borrow, they know that that can be easily cushioned. The challenge we have is that, yes, you're borrowing, but majority of this is going to recurrent expenditure. What simply means you're paying salaries, electricity, water, and other normal daily operational expenses. If that was going to development purposes, then that will be able to spur the economy, and we'll be able to see a significant growth economically.
All right. Honorable Wanga, you know, on the 30th of April, the finance bill comes to you in Parliament. What would you like to see there, considering the kind of conditions that people are going through right now as we speak?
I think we must cushion our vulnerable people. So both in the estimates and in the finance bill, we must look at ways of ensuring that our vulnerable population is cushioned through, you know, stimulus packages, but also through whatever tax relief can be offered. We must deal with corruption, you know, fair and square. Then we must facilitate the revenue-raising agencies to be able to widen the tax bracket. You can't do it with facilitation money.
We are back on.
We are back on.
Yes, go ahead.
Yeah, so you must spend money to raise money. We must be able to spend money to raise money. We must invest in revenue collection. So we cannot underfund KRA, for example, and expect that they will be able to earn us the money that we require. We need to hire people, because we have so many also unemployed Kenyans. We need to hire them and get them out there looking for the revenue in the areas that we haven't looked before. We must get technology, we must get creative, we must get into spaces where we haven't been before in terms of revenue collection. But we must also look at how else government can raise money. I spoke before about divestiture, about, you know, offloading some of these state-owned enterprises, giving the public an opportunity to own them, while at the same time raising money. We could easily raise, you know, 3, 4, 500 billion through targeted divestiture of our public bodies, some of our public bodies. So these are some of the areas we can also look at in terms of raising more money moving forward and dealing with a sustainable. So if I look at the finance bill this time, I'd be looking at how are we being creative? Who are we getting into the bracket? Who hasn't been? I'll be frowning upon, you know, any increases, you know, of taxes on the common mwananchi or the products used by the common mwananchi.
And Honorable Wanga, you know, the tough new rules that IMF is proposing there, will this lead to job cuts in the public service?
I think restructuring of our state-owned enterprises, not necessarily job cuts, but we must look at our state-owned enterprises. We must look at why are they, you know, running at these kinds of losses? Because when they're running at these kinds of losses and Treasury has to buffer them over and over, then we must look at how do we deal with that. But we don't want to see, you know, people losing jobs as well, because that will be trying to solve a problem by creating another.
Okay. Let me take quick closing remarks from my guests right now, and I'll start with you, Makori. Where do we go from here? We're already in this quagmire.
I think it's inevitable that we just need to be able to look at what we call the fiscal consolidation. And that simply means we have to look at how we spend, start looking at our priorities and reprioritize what you already have, and being able to just say, do we really need to complete this now, or can we be able to postpone this 1 or 2 years from now, and being able to release those funds and inject that even to SMEs to be able to spur the economic growth.
Okay.
The other thing that, as we said, state-owned enterprises, there are those that are purely meant to be profit-making, but they are persistently on a loss-making position. Then that means that there needs to be serious restructuring of those entities to achieve their mandates as they were established, so that they don't fall back to the national kitty for support.
Okay.
I think the other thing that we also need to be able to be cognizant of is being able to look at how then do we spur productivity in the economy. And that will mean that the faster that we contain the pandemic, and being able to put out measures and plans to be able to contain this, because even as we locked, we've not had a serious plan and being told that this is how we need to be able to deal with this pandemic, with all the vaccine. And we know that there's also competition for the same vaccine, and it might not be able to get to the country as soon as possible. But then being able to have effective measures, even issues of wearing masks, keeping social distance, that then are able to quickly deal with the pandemic and being able to open up so that the economy can start being able to spur itself.
Okay.
That is what we'll be able to see. But in terms of debt, we have a long way to go, maybe 2 to 3 years, if we really restructure this to be able to get into a position where we can say that we have sustainable debt.
Okay.
We are currently in distress.
All right. Sam?
The government should be able to facilitate the productivity of small medium entrepreneurs, especially making sure that the cottage industries, the policies that govern the cottage industries, they are very favorable, because you find that the cost of doing business in Kenya is very expensive. The government should be able to lessen the power cost, which make it very expensive for people to come and produce in Kenya. It's easier for people to go to South Africa and import and export the goods from South Africa to Kenya than producing here in Kenya. The other thing that I would like to see is the increase the tax base. The increase the tax base, it lessens the burden from the people who pay taxes. The government says that small medium entrepreneurs don't pay taxes. We do pay taxes, and it's heavy on us because the environment of doing business is not good, but we are resilient. Yeah. So the government should come in and make sure that the environment that you are doing business is good. Lastly, but not least, I would like to say that formalizing the informal sector is also very much important, so that the government can be able to take this sector very seriously and know that we contribute to over 5% of the growth of the economy. So when the projection is about maybe 6 or whatever percent, 3%, which is 50% of the projection, comes from small medium entrepreneurs. So it will be a paradox when the government does not inject money and facilitate and bring cushion to this industry.
Okay. Tony, no matter how many of us sign the online petition, this money is coming, right?
Yes.
There's no turning back now.
Yes. That's how IMF works. They're not swayed by that. But I have one challenge, I think, to the chair of the National Assembly of Finance, who is Gladys Wanga. I think with the 1 year that this parliament has remained under, she as the chair of the Finance Committee, I think one of the main things that can seal her legacy in that position is to find out why is the Public Debt Management Office is not working as expected. And the main thing about that is we need to have a public register of all Kenyan debts, including guarantees. We don't have that. So even if we are talking about our debt is 7.5 trillion, it's 8, it's 9, we have no idea. It's only Treasury people who have, a few people within Treasury. And that's not how the Constitution envisioned in terms of debt management. We need to have a public register of all our debt. And so my challenge to her is that I think that's one of the things she will need to consult with the Public Debt Management Office, which has been set up, and what are the challenges they're facing in getting to that. My other thing will be when she received the finance bill, I think one of the things as we talk about recovery is we don't have a vaccination financing plan from the budget policy statement that we received. What we see is that government intends to borrow from World Bank around 10 billion for the vaccine. That is very little. So I think as parliamentarians generally, they need to work on how do we finance a mass vaccination plan and that is where the recovery of Kenya lies.
Okay. Thank you so much for making time. CPA Edwin Makori, CEO, ISPAC, Tony Watima, Independent Economist, Samuel Karanja, CEO, MSME Alliance of Kenya, and Honorable Gladys Wanga, Homa Bay Woman Representative, but in this case, she's the Chair, Finance and Planning Committee. And thank you for all the feedback we've seen here. We'll keep this conversation going all along this morning. I see a lot of it happening right now online. As soon as we have more details, we'll definitely pass it on to you. For now, taking a quick break. When we come back, yesterday, last evening actually, Waiga Moura had a conversation with Mukhisa Kitui, who is running for president, and they also spoke about this issue around debt. We'll find out what his thoughts are in regards to that in just a bit.